Hello, and welcome to the Liquidity event. I'm your host, AJ.
And I'm Shine.
Thank you for
I don't know what
tuning
accent
in.
you're doing.
I don't know.
Where the hell is that?
I don't know. I booked my tickets to London, so I've got London on the mind.
Ah, that's your Cockney accent?
I don't know.
Wow. All right. This is episode number 28 of the Liquidity event, hosted by a French-ish lad. Recorded on February 2nd, 2022, airing February 4th, 2022. What's going on, AJ?
Not much. I am visiting my mom in Solvang, California, which is a fascinating place. It is a mock Danish town plopped in the middle of California. There's like a windmill and you can get some Abelskiver and fudge, and it's a very cute little touristy anomaly. It's lovely here.
For people that want to live in America but fantasize about living in Europe, it's the right place for you.
Or really people who want to live in America but fantasize about living in Disneyland, because that's basically what, what it is.
Was it like 2 hours north of
Yeah, exactly.
LA?
2 hours. Yep.
And wine country? In Santa Ynez?
Yep.
I know all of this because I was just there over the weekend. We have this weird parallel life situation happening over here.
What are you doing for fun? Oh, that's what you're doing for fun also.
Well, yeah, last weekend I went up to wine country, which is so cute. People shit on LA so hard, and I'm having a great time.
No one shits on LA. Everyone loves LA. New Yorkers shit on LA.
New York, yeah, I've been living in New York for 8 years, so everyone's been dunking on LA the whole time I've been there. And now that I'm out here, it's just like sunny. People are nice. You drive an hour and you're like surrounded by wineries and like the nicest, cute little American businesses. This Carhartt hat I bought. I don't ever buy swag from little tiny businesses. I bought this little hat because I had such a good time at their winery.
Fun.
What?
Lovely. That's just so fun. What a fun anecdote.
Yeah. It's the same family. It's a different family. Or it's the same family, but not the same owners as Carhartt, the brand. They all wear the Carhartt clothing at the winery, and supposedly they drink all the wine at the Carhartt company. It's so cute.
Oh, that's so lovely.
But no, I'm not drinking wine today. I'm drinking scotch.
Okay. Any particular scotch that you'd like to share with the class?
Yeah, well, tax season's upon us. So I usually do a load up on liquor ahead of tax season. I bought like $500 worth of scotch, so I should be drinking single malt Islay for the next at least a week.
Cool.
We'll see how it goes. This is the Ugadil from Ardbeg. It's a
Ugadil?
Yeah, and it tastes like a campfire. It's like Lefroy vibes.
Like a good smoky scotch. Market's experiencing some volatility. What do we have in IPO watch land today?
Well, what does Renaissance say about the IPO market right now?
Yes. Renaissance, who's got some great data on IPOs that we track very closely. The IPO market remains chilly in a one IPO week. So a little chilly. The market's experiencing some sloshing and volatility. So companies are hesitant to go public when the market is not just going up and to the right. Challenging conditions in the IPO market continued this past week with only one IPO and 2 SPACs pricing. The pipeline was slightly more active with a number of small IPOs and a few SPACs submitting initial filings. Shane, you've got a small company that just submitted their S1 that you wanted to touch on. Is that,
there's 2 of them.
Yeah,
there's 2 of them. One of them I don't know what the hell they do, which is pretty typical for me because I'm an idiot. But Appgate is the one. Don't know what they do. They work in cybersecurity, which is so opaque, which is kind of the point, I guess. And yeah, they're doing about 42 million in sales. They're trying to raise $75 million. They got an S1 out. They've only grown 11% over the last year, which is odd for an IPOing company, especially one of this size at 42 million, especially since they've been around since 2005. And they have 442. Yeah, they have 440 employees at 42 million in sales. The numbers are just really odd. Their gross margins are 50%, but their actual earnings are a loss of 100%. They lose 87%. So they lost 51 million on 42 million of sales. So it looked like they must be trying to turn some sort of corner by raising a year and a half of revenue here via this IPO. So I didn't see what they're using the funds for, but I'm going to assume it's some sort of scale. Our other IPO that we're looking at, by the way, that company is based out of Coral Gables, Florida. Our other IPO that we're looking at is Loop Media, which is something that most people listening to this have experienced, or what they do is something that they've experienced. They sell hardware. And through that hardware, it's kind of like an Apple TV, from what I understand. You plug it into the back of the TV, and it just loops content that I imagine that they produce, or they at least license. They're only trying to raise $12 million. They only did $5 million in sales last year. They have 49 employees. They're out of Glendale, California. So we got a Los Angeles-based production content hardware company that was founded in 2015. Only doing $5 million in sales, itty bitty,
tiny,
trying to raise, 12 million. So 2.5 years of revenue is what they're trying to raise there. Also, not profitable. They had a loss of 31 million on 5 million in sales. So
it took me a minute.
They need the money.
It took me a minute to figure out what they do, but now I realize that I've definitely encountered this. We're a multi-channel digital video platform media company that uses marketing technology, or MarTech, to generate our revenue and fuel our services. So yeah, basically they will come and do high production value videos. They've got deals with Warner Music, Sony, Universal, so they can get you, your top 40 songs, splashy music, flashing lights in the club, beautiful steak dinner. Like we've all seen those videos. Like, oh, you got to come to the casino this weekend. This is Loop is assisting with that content.
Yeah. So anytime you see a bunch of content that you don't know where the hell it's coming from on, like, you're at a sports bar with like 50 TVs and there's no game on, but there's something looping that's very entertaining, like very, very highly edited, right? Like this is an example of that content you can purchase. Yeah.
I'm into that.
Yeah.
That's my commentary. Into it.
That's your commentary. All right. Let's ride.
General market updates. What is going on in the economy?
You just want me to just speak on the economy in general?
Yeah, what's going on? We got this article here. The U.S. economy grew 1.7% in the fourth quarter, capping a strong year, despite what the headlines throughout the year would indicate.
Yeah. So 2020 was a terrible year in terms of the market shrinking, going into what looks like a recession for 2020 thanks to the coronavirus. And then in 2021, we have some good news, people bouncing back, the resiliency of the U.S. economy. We've grown by 5.7%, which is the largest annual increase since 1984. Ominous year. So, that is... going to make a literature joke, but so we've grown 5.7%. Really, really, really strong year in terms of that time period. But do we really care about individual time periods? Like when it comes to returns or growth or percentages, return on investment, all of these things, we always have to think about the time period that we're looking at. So over the 12 months of 2021, we have grown 5.7%. But if we look back over the last 24 months, if you include 2020, we had a loss of 3.5%. So what we see, in my opinion, in 2021 is just reversion to the mean, which is, a term for economics or econometricians, anyone that studies averages. It means that, like, the mean is the average, and what we have here is a returning to the mean. There are occasional outliers, and we may think that, things are exceptional here and there, but in reality, when what we have here is a reversion to the mean. So if we average those 2 years together, then the economy has grown just 2.2% over the last 2 years, which is below our ongoing post-World War II average of 3% over the last, between 1948 and 2020 in general. So it was a strong year. I'm glad that it happened, but we got to keep the longer time frame in context.
Yeah, there's some debate, about it was a strong recovery, but that recovery was bolstered by very strong policy support from the government. There's a quote in this article from Julia Coronado, a former Federal Reserve economist. She said, last year was defined by very strong policy support, and in 2022, she believes it's going to be defined by the removal of that support by Congress and the Fed. So, we had an economic disaster warranted by the coronavirus. Government comes in, spends a bunch of money, tries to fix it, brings businesses and the economy back. What happens in 2022? We shall see.
Yeah, it'll be interesting to see what the infrastructure bill has to say about government spending and its impact on the economy. And then if we do have a flip in the midterms, if the Democrats lose control of the House and we have no more legislation that will get passed through this administration. It'll be interesting to see how all that impacts 2023 and 2024. Something else just to keep in context is how this all impacts people listening to this, like via wage growth, right? Because if the economy does well, who benefits the most from that? It's a classic labor versus capital debate. Who has really benefited from this growth over 2021? A lot of people would argue that the richest entrepreneurs, and we all know that because billionaires are in the headlines every single day, even on this podcast, their wealth and the wealth inequality in America has been exacerbated by the pandemic. So I just went and pulled another article just to take a look at the Bureau of Labor Statistics growth in wages. And it has been a strong growth in terms of wages. Wages have increased at the fastest pace in terms of nominal wages, which doesn't account for inflation, having increased at the fastest pace in a decade, which is awesome. More money is going into labor's pocket. Unfortunately, inflation has outpaced the wage growth. So in real terms, people are taking home less money. So what we have here is the fastest growing economy in 50 years. We have wages going into people's pockets dipping. So who do you think is benefiting from all of this growth in the economy?
I know.
You know the answer?
The billionaires. Those with the capital.
Bit of a leading question. Yeah, rhetorical question there. Yeah, so a lot of the money is going to business owners, aka capital. So I think, there's some funny tweets about how Starbucks is increasing prices because of supply chain issues, and then literally post the biggest profits that they've ever had. Yeah, it's like,
Is that what's going on?
Shout out to the PR professionals listening to this podcast and all of the machinations that they throw down. Speaking of companies and the pandemic, we have an article here on PetSmart's pursuit of a SPAC and whether or not that they timed that correctly. Did you get a chance to dig into this? You want me to riff on this guy?
I did not. You are a pet owner. I am not. Every time I hear about PetSmart, I just think of pets.com, which is just like the classic financial textbook. This was a fail, a hilarious fail IPO. Back in the 2001 financial crisis. So the classic example that gets trotted out of like worthless stock where a lot of hype ahead of IPO and then basically became a penny stock. So it is funny to me that 20 years later, PetSmart's trying to go public, which is basically the same thing as pets.com.
Yeah, well, it's interesting that PetSmart also, it's got SPAC in the title. It's, did PetSmart wait too long to pursue a SPAC deal? It comes from Forbes here, and there's some interesting takeaways. Yes, I am the pet owner. I've got young Charlie here, sleeping under the desk right now. Reading this article reminded me to order some more food from Chewy.com. I didn't know that PetSmart had purchased Chewy along with private equity partners back in 2017. So they picked up Chewy for $3.5 billion. And PetSmart itself was taken private after struggling in the public market by some private equity firms. Private equity firms teamed up. They spruced the company up. They made an acquisition, and now they're looking to SPAC themselves. PetSmart had purchased Chewy, to circle back to that, purchased Chewy in 2017 for $3 billion, took it public at, I think, $9 billion. And then on the day of the IPO, the shares were up, this is in 2020, were up 60%. So they turned $3 billion into $14 billion in just 3 years. So shout out to them. I think, however, these pandemic-fueled stocks, Chewy, Peloton, and Netflix, are all 70% off their I don't know about Netflix. I know that Chewy and Peloton are both way off their pandemic highs when we were not sure how long this pandemic was going to be, like pre-vaccine days, and have since experienced a toppling. They're no longer kings of the hill. They're not the hot stocks they used to be. I can say that if they do pursue a SPAC, that PetSmart was acquired in the private equity deal. I think it was. I don't have the numbers here, but they have grown about 60% over 7 years when that private equity deal happened. So they're up just 7% year over year, which is not that very good of a risk-adjusted return. Actually,
no, it's not.
No, the private equity investors must only be happy based on this Chewy deal. Hopefully they took some chips off the table during the pandemic and sold some of these bad boys, but I don't know. I imagine they did. I mean, that's the whole point of private equity, is to juice the numbers, take it public, and then make a sale. So hopefully, I don't know why I'm rooting for private equity, but
Those poor private equity firms.
oh,
They've really had a rough 5 years.
yeah. So more COVID and Metaverse, working from home consolidation going on. Did you have any more?
Wait.
Anything else you wanted to touch on?
Yeah, one more thing here. There was a quote in this article that nearly 1 in 5 Americans acquired a new pet during the pandemic, according to the ASPCA. That statistic is wild. That's insane.
Mm-hmm.
That's all.
I would like to say that I acquired my animal before the pandemic, and I'm
You did.
A true.
I mean, we had a stat on our
gold star pet owner
for our across Brooklyn FI clients. I think it was probably 1 in 5. I think that our small sample size lines up with the national average.
National average. Oh yeah. Yeah, I'm gonna skip over my Petscom is literally the name of those Los Angelinos really love their pets. This is a pet paradise here.
A Petscom, meaning a restaurant for your dog.
It's yes, but it's also literally called Petscom. It's on Sunset, right by where I'm staying.
Oh,
I don't know. I will be visiting this weekend to do some research. You'll see it on the credit card. Don't worry about it.
No.
All right, moving on with the
50% discount.
Yeah, moving on with the theme that we've seen over the past few podcast episodes. We had the Microsoft acquisition of Activision Blizzard. We had the Zynga acquisition by who bought Zynga? Shit. Pause. We don't have a soundboard for me spin.
Boop, 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 boop. Let me ask the producer.
Take Two.
Hey,
No.
Monica.
No. It was Take Two bought, because they own GTA Online, or they own GTA Grand Theft Auto. So we're going to see Grand Theft Auto on your mobile phone. Well, we now have some additional consolidation in the space. Sony has bought Bungie for $3.6 billion, which means, Bungie is the creator of Halo and Destiny, which are both super popular, super famous. First-person shooters. If you have a man in your life, and then you have met somebody that has played one of these titles, it's funny. It's so quick turnaround on these deals. Like, they can make these acquisitions faster than I can find a tax manager, which is crazy. Because Sony had lost 30% of its value after Activision Blizzard announced its acquisition. I'm sorry.
And
after Microsoft,
that was like 3 weeks ago, right?
That was like 2 or 3 weeks ago. Yeah. And Sony's stock price went from $130 to $100, took a big dip due to economies of scale from its competitors, and then goes and snatches up a great design studio, Bungie, for $3.5 billion, and their stock price is up 10% off the acquisition. It's just wild.
My takeaway from this is?
What's your takeaway, AJ?
A lot of 10b5-1 plans going on here at Sony. Lot across all these companies, meaning that
you got some jargon to throw at the listeners.
Yeah, a 10b5-1 plan is for executives or really anyone at a company who has material non-public information and they want to be able to trade stock. They've got to list out all the trades they're going to make, typically for the next 6 to 12 months. And they are actually restricted from trading because they know of these massive deals that are going to likely dramatically impact the stock price. So they have to basically say, like, I know this is happening. I'm not going to be able to trade during this time. So here's all the trades I'm going to make for the next short while. So when we see this much activity at one company, I would imagine typically it's just like the CEO and the CFO who have to do this. I would imagine the pool's getting bigger for those folks who have to disclose all those trades.
I like what you're thinking. Speaking of things that get gamers excited, do you want to talk about Glossier?
That was the worst segue in the history of segues. That didn't even make any sense.
That. What do you mean? Makeup? Gamers? Come on. You hate it, but you know I'm right.
I didn't follow that. Yeah. Glossier, a beauty company that I greatly respect their CEO, Emily Weiss, was in the news last week for not great news, laid off 1/3 of its corporate employees. And notably, most of those employees were on the technology side of the business. So a lot of software engineers. It's notable because, Glossier, they make makeup. They make wearing Glossier lipstick right now. At the beginning of the pandemic, they had a big retail footprint. They were opening these beautifully designed retail experiences, New York, LA, Chicago, London. Obviously with the pandemic, they had to shut those down, laid off a bunch of workers in those stores, that made sense. But this layoff is a pretty scary signal to investors to say, hey, we got way ahead of ourselves on hiring. We were investing in, sounds like some kind of internal technology infrastructure, probably some cool new project that we'll learn about 2 years from now. But to lay off a third of your workforce, not a good look for Glossier. So we'll be watching this story very closely. I love Glossier, though. Still a stan.
Makeup, gamers, no? Still nothing? Still not there? All right. All right. Well,
speaking of stories.
What? Wow. Yeah, I mean, you know, we've talked a lot about VC and PE money. We have this one's from the website. Have you heard of this website, twitter.com?
No, is that the one where you send sort of short messages?
It's where you post nudes and people can vote on them.
No, that's twatter.com.
Ooh, yikes. All right. We'll cut that
Anyways,
out. We'll cut that out.
I can say it. It's fine. No, on Twitter, a very popular Silicon Valley VC
it's Marc Andreesen,
investor,
right?
Marc Andreesen. Yeah, Marc Andreesen of Andreesen Horowitz posted this tweet. Wait, I want to read the tweet because it's so good. First of all, this tweet is about Calendly. For those of you who are in this space, you've probably seen a lot of extra chatter about Calendly in the space of, I don't know, the space that we occupy. The tweet is, notice with immediate effect, anyone who disregards my Calendly links will be perma-banned from raising venture capital in Silicon Valley. So,
tongue in cheek.
Did you notice any sarcasm there? That was a little bit. That was a joke. And then it started this whole like tweet storm of people writing these really like genuine screeds about how Calendly is classist and blah, blah, blah. But at the end of the day, Calendly is an amazing tool that prevents people from sending 15 emails about when they're available. And anyone who thinks otherwise is a dum-dum. So I'm going to agree with Marc Andreesen here. How about you?
Calendar battleship, as I like to call it, or somebody else once coined it, is, are you free on this day? Wait a few hours. Nope, but I'm free on this day. Oh, that slot's already been taken. How about now? Let me talk to my executive assistant. Let me move some stuff around. 25 emails, aka calendar battleship, to just set up a very simple meeting with Zoom link installed, automatically goes on both people's calendars. This is the most beautiful thing in business software that's ever happened. It's simply a problem that has been solved. Okay, I'm not trying to hear any alternatives to this. Okay, everything else is an okay boomer comment. Like, let's keep moving.
Yeah, the big reply was from this guy. I don't know who this is, but he writes this like long text. When someone sends you a Calendly link and asks you to slot yourself on their calendar, they are telling you that you are less important than them and that all of their current meetings are more important than whatever you need them for. It's a get in line move. And that's just like wrong, right? That's just like a misunderstanding of the entire purpose of Calendly.
There's some arguments that don't deserve to be posted. Like, I think that Twitter should remove this, just like vaccine misinformation should not be on Twitter. Like, This is business, B2B misinformation. Like, just shut the fuck up and let's keep moving. Speaking of business information, SpaceX rolls out a premium Starlink satellite tier at $500 a month. Everyone knows I'm a Starlink stan. Right? Yeah. Well, as a wistful nomad, but not an actual one, I dream of you can work from literally anywhere. With a piece of tech, and Starlink is that dream materialized. And they sell satellite dishes that are about 3 feet wide. You can take them in your car. You can go post up anywhere. Puerto Rico, middle of the ocean, top of a mountain. Supposedly, this new Starlink satellite promises that you can work from literally anywhere. The old ones are only work in certain parts of the globe. Mm-hmm. I moved mine, and it didn't work after I moved, which was unsettling. I was like, I paid for this thing and now it just literally doesn't work. It's in a storage unit. Yeah. Well, if only I could pay $500 a month, it'll work anywhere. I
think they've solved that problem for you.
Yeah, with money. Anyway, so Starlink is rolling that out in Q2 of 2022. So for those of you that can afford it, they mentioned the word business like 15 times. So it's for those of you that have the access to write-offs or the 50% discount.
Which is not a real thing, by the way.
It's not a real thing. It's just when your business partner pays for half of something because you put it on the business credit card.
Oh, that reminds me. I went out to a lovely lunch with another fellow planner of ours on Friday, and you'll be seeing that receipt shortly. Didn't take Amex, so
Love to see it. Love to see it. Love to subsidize your business partner. I have a couple articles on taxation, so unfortunately our listeners will have to put up with me for a little bit more, a little bit longer. We have a financial post, the U.S. tax credit. There was a new U.S. tax credit for those of you with kids. They were sending advances on those tax credits throughout July, throughout 2021. Apparently, those letters are incorrect. So pray for your tax preparer that has to rectify these things. Just log into your IRS portal, please, if you receive these. Like, if you don't have access to your IRS portal that has all of your tax data that the IRS knows about you, please, what is the bequest?
Beseech you.
Beseech you. Thank you, English major. Next article here is on taxation of the metaverse. So rolling with our metaverse theme, we have an article here from Accounting Web. I think it's kind of interesting. If you buy a digital asset, if you buy something on Amazon, there's sales tax associated with it because it is delivered to you. Wherever it's delivered to you. The Wayfair case, when it went to the Supreme Court a couple of years ago, overturned, upended all the sales tax paradigms in America. Amazon had not been charging sales tax for, decades, and it was a competitive advantage that was just a legislative advantage that your local mom and pop store couldn't compete with. Amazon didn't charge sales tax, but they had to because they're brick and mortar. Well, if you sell something in the metaverse, if you sell an NFT, what state is that happening in? How are they going to tax those transactions? Just an interesting concept for people to think about. And there will be fintech innovation in that space, along with other fintech innovation in the metaverse space, speaking of spaces, if you think that the metaverse is a going concern.
So if I buy a cool scythe for my avatar in the metaverse, I have to pay sales tax on it?
Potentially. That's where our accountants' heads go immediately. So watch out for that. Something to think about.
I think I'm going to opt out of the metaverse, I've decided.
Oh, yeah. Unsurprising. What about if Glossier drops a meta store? There we go. There it is.
Potentially.
You'll visit.
I'll visit the verse when it conveniences me.
I'm not inserting all the other metaverse stories about the accounting firm's acquisition of digital space. I think Deloitte is one of the big four firms that have spent over $50,000 on literal metaverse real estate. That they were into blockchain back in 2012 and 13. I remember getting invited to go to blockchain conferences back in 2012 and 13 at Deloitte, because these accounting firms they don't feel like they are on the cutting edge, but they really do engage in the cutting edge of technology and the accounting and the facilitation and administration of all these spaces. So they've spent a ton of money on virtual real estate in the metaverse. Maybe I'll drop some of those articles in the future to check in on them. But let's end on a high note. Let's end on travel and tech. Travel tech. You want to do this one? Tech.
Sure. What do we got here? Oh, you're
a Wall Street Journal article about how the concierge that you're speaking with is unusually chirpy and quick to respond because it's probably artificial intelligence. Yeah. Yes. So your hotel's concierge chatbot is probably not a human. And I'm just curious about your recent hotel experiences. You've been traveling a bit.
Yes, I have experienced these chatbots and they're great. Yeah. You park your rental car, and you want to go somewhere, want to go to dinner. Instead of walking downstairs, handing someone a ticket, you text the bot and you say, I'm ready for my car. They've already got your ticket and your car is waiting for you. It's great. I will say that in the hotel that I stayed in most recently, there was a literal robot in the lobby that I don't know if it was actually functioning. Every time I see a robot in an airport or a mall or a hotel,
a Wall-E robot?
Like a Wall-E robot, it's broken, right? So it's always a sorry, out of service sign. I think this robot was delivering things like I forgot my toothbrush, and the robot would literally, but I almost ran into it in the elevator as it was coming.
Love it. Get used to it.
I love robots.
Yeah.
Got a no-brainer for me this week?
I do. I'm going to steal your, we have been using as a firm, this is for the entrepreneurs out there, if you're looking for a people management platform in terms of performance reviews, goal setting, OKRs, etc., Lattice has worked super effectively for Brooklyn FI. If you are in a position to recommend something of this nature to management or the C-suite at your firm, if you're feeling like you're lost in terms of performance management, check-ins, and praise and feedback, It's been a really cool tool that we've rolled out, and it's been really effective at Brooklyn FI. So that's my no-brainer of the week. Check out Lattice for people management.
Cool. Thanks so much. My no-brainer of the week is upgrade your AirPods to Pro, because now they actually fit in my ears and they don't fall out anymore. And apologies to all those people that I had conversations with over the past 6 months.
Yes, I'm familiar with your AirPod woes. By the way, if you're wearing AirPods, on the other end of that call, I can hear it's like a fucking megaphone going off every single time. So it's
every time
they
I
need
wore
to fix that problem.
my regular or the free, they at one point they were free with the iPhone. I forget which generation that was, but those are the ones that I have, and they would like literally like jump off out of my ears.
Yeah.
Anyways, this has been the Liquidity Event. Thank you for listening. You can email us at liquidityevent@brooklynfi.com. Weirdos can leave us a review if they want. You can find the show notes for this episode at brooklynfi.com/episode 28. We'll see you next week. Thanks for being weird. Bye.
Bye.